We're in the thick of it now. Markets are crumbling. The central banks are in full printing mode. And in this video, I'm going to show you how we got here, how I think this ends, and of course, more importantly, what we should be doing about it right now. So stay tuned. All right, welcome back. If you're new to the channel, my name is Mark Moss. I like to talk about making money, investing money, having overall success. So if you like any of those topics, which I'm sure you do, make sure to click like and subscribe right now. Make sure to hit that bell notification to get notified every time I put a new video out. I'm going to be putting out a lot of videos that are going to be specifically to help you get through this period that we're in right now. And today we're going to be talking about where this end game is and what we should be doing about it. So things are moving very fast. They're moving very, day by day by day, and it's happening so fast that I can't even keep up with the news. I mean, credit markets are freezing up, complete industries are shutting down, governments have committed to printing trillions of dollars. As of today, checks are supposed to be being sent out to all Americans, like checks in the mail. Meanwhile, the market's crashed harder and faster than any time in history. It's fallen about 30% in 20 days, which has never been seen before, not even in the 1929, 1930 Great Depression. A lot of people want to blame the virus on this, but it's not the virus's fault. The world was ready for this. As a matter of fact, it started cracking up a long time ago. If anything, the virus was a pinprick to a balloon. So imagine a balloon that's overinflated, ready to pop, and then you had a pinprick. Maybe it was that, but like I said, it really started a long time ago. And I mean, really started a decade ago. I'm not going to go that far back, but 7 months ago, September of 2019, we saw the repo market starting to break apart. And I've talked about this in other videos, so I'm not going to go super deep into that. But basically, you have this overnight market where banks have to settle every single night, and they put up U.S. Treasuries, which are cash. They're the best asset, the most safest investment or asset you could have, and they put up cash as collateral, and the banks have to settle. And in September 2019, it didn't have any money. It froze up overnight. The credit markets basically seized, and the Fed, the Federal Reserve, had to step in and put in $75 billion, $75 billion in one day, overnight, to keep the credit markets from freezing up, from seizing up. Now that sounds like a lot of money, but that was in September of 2019. It went from 75 billion to 100 to 150 to 250 to 500 billion, and right now today, we're seeing $1 trillion a day, $1 trillion a day being put into this overnight repo market just to keep the markets from freezing up. Now, like I said, we can go back way further, and really it started back in 1971. Of course, I've made, a dozen videos about this. I've referenced this date a lot. 1971 was the time when we broke the gold standard. The whole world's been on a gold standard for 5,000 years. In 1971, we severed it, and we entered into what's the greatest financial experiment of all time. We're about 50 years into this money experiment where basically we don't have real money that was backed by something. We have fake fiat money. All right, and as you can see on the chart on the screen, in the last 50 years, since 1971, real wages have been falling. And you can see on this chart right here that since that date, debt has exploded. It's gone through the roof, and that's because when we had to actually have a money backed by gold, we were limited by how much we could print. And once we severed those ties, it was unlimited. And as you can see from that chart, it's just blown up from there. And so it's basically been trying to end ever since it started. Since 1971, we got off the gold standard and we started this fake money experiment. It was already failing right from the beginning. Now, the Western world started building up debt, right? Building these bubbles of debt, more and more debt, stunning proportions. I mean, you can see on the chart right here how much debt has been built up. And right now, it's deflating, right? Imagine like a balloon, right? Filling up with debt, and it's deflating right now. Now, this isn't the first time it's happened. It's tried to do this in 1974. A couple years after, and tried to do it in 1981, 87, 1994, 1997, 2001, 2008, 2011. Every time the fake money balloon has tried to deflate, and each time the central bank, the Fed, has responded with more debt, filling it back up. So it's trying to come down, and they fill it back up. Each time the Fed was able to do that. Each time they were able to fill that balloon back up because there was enough balance sheet capacity left over, as you can see on the chart on the screen. But the amount of assets, the savings, have been going down, down, down. So while there was, still assets in the system, there were still net savings. we've been in deficit spending, meaning we've been upside down. If you're a household, you're living off your credit card, right? You can see on the chart above, and we've been in deficit spending, and we're at a point now where there's no capacity left. So what happens is every time the balloons tried to deflate, as soon as this fake money tried to get kicked out of the system, each time it took more and more stimulus to do this. It's the law of diminishing returns, right? In the beginning, it just takes a little bit, but each time it takes more and more and more, kind of like a drug addict, right? You need more and more drugs to get that same level every time. And now, if we want to look at just kind of like the most recent, if we go back to 2008, if you remember 2008, the great financial crash, the entire financial system of the whole world basically came to a standstill. If the Fed didn't jump in, the banks were going to run out of money, ATMs were going to go dry, people were going to go crazy, etc. All right, that's how bad things were. And they had to bail out the mortgage companies, and they put together a TARP bill. TARP, it was $700 billion. $700 billion. It's a lot of money. In addition, Obama put together a stimulus package of another $800 billion. $700 billion, $800 billion, that was the numbers, okay? Well, right now, just in like the last week, and this number is going to go way up probably by the time you watch this video later, but in 1 week, the Fed's already committed over $2 trillion. And I mean, it's been less than 20 days, all right? Think about that, from 700 billion to now 2 trillion. But that's just a drop. That's just a drop in the bucket. The Fed's about to print 10 trillion. 10 trillion, and that's just the Fed. The other central banks around the world, they're doing the same thing. They're trying to restore solvency, right? There's no money out there. They have to print more, more credit to keep everything from freezing up. Now, how is this going to end? Can they just keep printing money into infinity? Does it end at some point, right? Will we see inflation, right? So if they print all this money, are we going to see hyperinflation? Are we going to see deflation, right? That's what we want to know. Now, I made a video recently where I talked about everybody sees the end game, which is deflation. The question was, do we see inflation first and then deflation, or do we go right to deflation? And everybody's trying to decide which way. I think most people are on the deflation side, which makes sense, right? We have, hundreds of trillions of dollars of fake debt, and as people default on it, it deflates. Right? So that money is basically in thin air, right? As soon as I just say I'm not going to pay you back, or I'm unable to pay you back, instantly that money's gone, right? So it's deflating. We can see that everybody's bracing for that. They're ready for deflation, which is why the dollar's getting super strong, which is why gold's going down, which is why Bitcoin went down, etc. And the bubble's shrinking, the money's disappearing from thin air. But I'm seeing something a little bit different. Like I said, we're printing massive amounts of money, but yet the stocks are still dropping. Gold's dropping, right? Everyone's flying to the dollar because of that deflation. But I think the final act of this isn't just hyperinflation. It's not deflation. It's actually something different. It's actually, the final act is stagflation, all right? Is basically combined with inflation. So stagnation, meaning nothing moves. The market doesn't move, it doesn't change. But it's also combined with inflation, all right? And it ends with a synchronized global currency devaluation against gold. Now, I've referenced several times before, we can always look at, Japan as kind of like our leading indicator. Japan's about 25 years ahead of us, and they've been in this stagflation for about the same time, 20, 25 years. They've had no economic growth. Their debt to GDP is, 350% debt to GDP. Their real estate market has cratered and it never came back. And just nothing's growing. Nothing's happening. They're seeing inflation, but there's no growth. And so what happens is, like I said, this basically leads to an end of a synchronized global currency devaluation against gold. And it's the death of the existing world monetary order as we know it. Now, we saw something come out just a couple of days ago, and it came out from Credit Suisse, I think the president of Credit Suisse, and he says that, if you see on the screen here, he says longer-term risks to consider. Central banks are taking on credit exposure, and they're taking on the risk of other central banks. He says, what happens when it all blows up? Do they go bust? Either yes, and the fake fiat currency is ruined. They don't, or they don't because they print money to cover their losses. So they either go bust or they print more money to cover their losses. But either way, whichever route they go, the integrity of fake fiat money is ruined. And so attention is going to be on a new currency, either gold or digital or both. Now, I recently made a video, you can see it right up here, where I talked about how gold gets to $50,000. And I showed how I could even go higher than that. And I know it sounds extreme, but basically it came to the same conclusion that at the end of this, money as we know it, the currency, dollars, euros, whatever, they're ruined, right? There's no more trust in that, right? You have to understand that we have to trust our money. Money used to be real. Now it's just based off of trust. But once we lose that trust, how do they restore it? And in that video, how gold gets to 50,000, I explained it, I broke it down, and basically that's what he's saying exactly the same way. Either way, he says either way, the integrity of the fiat is ruined, and so attention is going to be on a new currency, either gold or digital or both. And I agree with him. I agree with everything he said. Like I said, I made that point in that video. I've been saying it for a long time. If you check my video feed, the fiat money experiment is done as we know it. We have to go back to something, as he said, gold or digital currency, which probably is Bitcoin. In the short term, it's probably going to be a government digital currency. Just recently, the Secretary of the Treasury, Mnuchin, hired one of the vice presidents of Coinbase. Coinbase is the largest cryptocurrency exchange, at least in the US, so they hired him. Why? Why would they hire him? Because of a digital money, right? A digital currency. Also, like I said, I made that point about gold. So it's gold or digital currency. Bitcoin, it's going to be one of those things. Now, in the short term, we're going to see, like I said, continued deflation, rush to dollars, probably short-term pain in gold, short-term pain in Bitcoin. But the longer game is this switch. Everybody's ready for it, but are you? That's the question. Leave me a comment down below and let me know if you're going to be ready for that switch and what you're doing about it. As always, leave me comments down below. I'd love to see all of them. I try to respond to every single comment, what you have, and that's it. Give me a thumbs up on this video if you like it. If you don't like the video, give me a thumbs down. Either way, but let me know, because I always want to hear your feedback, and that's it. To your success. I'm out.